What's up everybody, welcome to the Stocks channel. My name is Corey and today we'll do weekly chart technical analysis on all of the indices, the VIX and Bitcoin. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so this week we did drop yet again and we did lose that critical risk level, which was right there at 41.58. So this is now going to be a risk off market while we are breaking down through some critical support, which means we could see more downside, so you need to be very cautious. Now also look to the right of your screen and you can see that we are now at the average drawdown from the date of the signal, which is from the backtest that tells us the bear market is over and we've likely seen the bottom. And that includes some very nasty bear markets like 2000 and 2008. But as you can tell, the max drawdown is all the way down here near the 3800s, and that was the max drawdown that we saw in the bear market of 2008. So while we are at the average drawdown, there is nothing that tells us how much of a drawdown we're going to see this year. All that we know is the backtest implies that the bottom is in, and from here, we are likely going to see higher lows and higher highs. Now keep in mind, a very real possibility in a bull market is a very volatile market, even coming out of higher lows and higher highs. And as you can tell, we are currently at the average drawdown. And let's just say from here, we get the average drawdown and we continue to bounce. Then we could still make a higher high and come all the way back down to the average drawdown yet again. And we can still get a very choppy market for the rest of the year and going into year end. So just because we are saying that the bottom is in does not mean we're just going straight back up to all-time highs. If you look at the path I just drew on this weekly chart, if we got something this volatile, it is still going to feel like a very treacherous bear market. But keep in mind, a bear market means that we need to come all the way back down and take out 3600, because if we're going to say the bottom is in, which is what the backtest implies, that doesn't guarantee it's just a smooth ride higher from here. So do not confuse the backtest with a smooth ride higher. I do expect there to be plenty of volatility moving forward, and we don't even know yet if we're going to continue to go lower than the average drawdown and possibly even see a new max drawdown. So we don't want to just blindly follow the backtest and not listen to price action. So while you should be aware of the backtest, because I do think it's very helpful information, you can't just blindly buy and walk away and assume there to be no volatility in your portfolio. Now also pay attention on this weekly chart. It does look like we're coming back down to the weekly 20 simple moving average, but this time price action is coming down from above, which means that could still be support. So there is the possibility we could see a bounce, and on the weekly chart there is a gap to fill in the 4200s. So with a weekly gap to fill and coming into some critical support zones, do not be surprised if we see a bounce in the short term, but you want to stay risk off while we're below 41.58, because below 41.58, if we are going down to make a new low, you are very likely going to see a very quick sell-off because we'll likely get capitulation. And that is why I continue to warn you to stay risk off below 41.58 or on SPY that's below 416. If we came all the way down to 3,500 on SPX or 350 on SPY, that is going to be a very treacherous drop and it will invalidate the backtest. So do not blindly think just because the backtest says the bear market is over that you can just blindly throw all risk management to the wind. Do not just assume you do not have to manage risk, because as you can tell, we are in a falling knife situation, and this could be the one time the backtest fails and we go make a lower low. So while I will continue to track the performance of the drawdown and where we go from here and relate it back to the backtest, you still need to follow price action each and every day, and you need to understand this is still a possibility that we could still see this sort of capitulation free fall. I don't necessarily think that is going to happen, but you can't completely rule it out. I do think we are going to have a very volatile market, and I think there's a very good chance we see crazy whipsaws in both directions. And then to finish out the year, we will likely see a much smoother ride because we're either going to put in a bottom or we're going to eventually get over some of this news that's driving the market to be volatile, and then we should see smoother market conditions. So prepare for the next 2 to 3 months to be very volatile, and that means it's going to be very difficult to trade. And keep in mind what I said, that you are staying risk off below 41.58, which means you are either going to be shorting the market at resistance or you're going to be sitting in cash waiting for SPX to get back above that level. And anytime SPX breaks below this level, you need to be very cautious to the downside. Now, one more thing to note is that a bull market simply means that you're making higher lows and higher highs. So if we continue to make these higher lows and higher highs and we still see volatility, this is still going to be a bull market, even though it still looks like it's going to be a very volatile ride. If you just zoom out and a market is making higher highs and higher lows, that is still going to be a bull trend, and that is still going to look like a bull market. But do not confuse the word bull market with a straight line higher. There are always going to be dips, and there is always going to be realistic volatility to get from point A to point B, and from point A to point B could still be higher prices, but it still could be a very volatile ride to get there. So just keep all of that in mind. It is going to be a very volatile market moving forward, but you will want to have realistic expectations and make sure you're managing your risk accordingly. On the bear bull survey, we still have very high bearish sentiment, which could be completely warranted given the fact that we are in a very interesting time in the market. But do keep in mind the market does like to hurt the majority. So as we come into support levels, if you are shorting the market, you will want to consider locking profits because those are going to be the areas that we are more than likely going to see bounces from. If those bounces lead to short squeezes because too many people are stacked up to the sell side, then you will see those impulsive counter trend rallies even if we are going to continue to trend lower. So while this survey doesn't guarantee anything, it's something to be aware of because anytime too many people stack up on one side of the trade, the market generally will cause the most pain by going against that direction. On the Nasdaq 100 NDX weekly chart, we also did break down below a risk level, which was this level right around 12,700. Even though we are just barely below it, you will want to be cautious while we're below this level. You can get a lot more risk on above 12,900. And as you can tell, we did break out from the resistance trend line on the weekly chart, but failed to hold the breakout. So if you want to get more bullish, you're going to want to wait until we can break back over about 13,300. Above that, we still do have a weekly gap up there at 14,307. But while we are in the short-term downtrend, you want to respect the fact that we could be coming to lower prices. The higher high breakout was right around 12,120. So it could be possible that we're coming all the way back down to retest that breakout, or we could find support right here at the weekly 20 simple moving average. We don't want to guess, we want to follow price action, which means we'll need to see where price action goes on Monday. But if we do bounce from here, it is going to look like we're bouncing off the 20 weekly moving average. So be a lot more risk off below 12,950, and do expect there to be the possibility that we still try to make a higher high once we find support. On the Dow Jones weekly chart, we're back down below some critical support levels. So again, we're seeing risk off price action because we are below 33,272. And we want to get a lot more bullish above that level and a lot more bearish below that level. As you can see, the Dow Jones did break down below the 20 weekly moving average, so that is looking a lot more bearish than the other two indices, and it is still above the breakout of the higher high down here right around 31,508. That's likely where we could be headed if we are retesting that breakout, or we could start to bounce as soon as this level here. So you will want to watch price action next week and set your risk right around 32,290, because if we break below that, we're more than likely coming down to retest the breakout at 31,500. Now keep in mind the Dow Jones does have this weekly gap all the way down here at 28,495, and that is a real possibility if the bear market is not over that we do go down there to fill that gap. Now it's very rare to see a weekly gap, so that could be a great reason why the bottom is not in, and that could be another warning sign that while we're below this risk level, you need to be very risk off because we could be going much lower. And while there's no guarantee that gap has to get filled, gaps do typically get filled on the indices, especially on weekly charts. So don't just assume we have to go fill that gap, but it is definitely likely and it's definitely a possible scenario. And you will want to stay a lot more risk off while we're below these breakout zones. On the Russell 2000 weekly chart, you can see we came back down below 1968 and we're coming back down to the breakout level at 1889. So the Russell 2000 is definitely looking the strongest of all of the indices. A lot of the other indices didn't have quite as impulsive breakouts and they're already back down below the breakout levels. But as you can tell from the Russell 2000, it is simply just coming back down to retest the breakout. So in the Russell 2000, you can stay risk on above 1889, but below 1889, you instantly need to get risk off because that will be a breakdown of the retest. So below 1889, we could be coming all the way down to the previous breakout at 1766. But if we bounce off this level at 1889, that is going to look bullish and there will likely be an attempt to make another weekly higher high. On the VIX weekly chart, we did see that spike off of 20 and we did break back over 24. So you instantly need to get more cautious while the VIX is above 24. But as you can tell, the VIX does have a weekly gap down here right around 21. And we are very likely going to fill that gap. We just don't know when. So for that reason, I think you should get more bullish if the VIX crushes down below 24 because it's likely going to fill that gap. But while the VIX is above 24, you need to just stay risk off because it's going to be a much more volatile market. On Bitcoin, it looks like we're coming back down to 19,000. And remember, Bitcoin is still in a bear market because it has never broken the downtrend of lower highs and lower lows. So remember, in order to break out of the bear market, we need to see a shift in the trend, which means we need the higher lows and higher highs like we've seen in the indices. But Bitcoin is in jeopardy of making another lower low if this support at 19,000 fails. Below 19,000, it looks like we would be trending down towards 12,000, and whether or not we actually get there is to be determined. All we know is we are clearly below the resistance trendline, clearly making lower highs and lower lows, and clearly seeing high volume selling currently. So you do want to stay risk off in Bitcoin, especially if it breaks down below 19,000. Now keep in mind, if you're accumulating Bitcoin for the next 2 to 3 years, you are more than likely fine buying at these levels because we will likely see Bitcoin higher than this price. However, if you're trying to trade it, you do need to respect the fact that it's in a strong downtrend. On the ARKK ETF, you could see another clear rejection from that breakdown because we did fail to break back over that support trendline, which is obviously now acting as resistance, and we now have a 2 weeks in a row sharp rejection from that level, and we are below the risk level at 48. So remember, in ARKK, I think you need to be risk off below 48, and you can clearly see it was a very strong rejection from the retest of that breakdown, and that tells you that this is still in a bear market and it's likely still trying to find where the lower low is going to be. You're either going to get a retest of the previous lows right around 40, or you're going to make a new low down in the 30s, but you do not want to get bullish until you start seeing weekly closes over 48 and then weekly closes above about 54. Remember, these are downtrends until they're not, and ARKK is in a very powerful bear market. So do not just blindly buy this ETF because it's not in the indices, and there is no guarantee where it's going, and there is no guarantee it has to make higher highs in the longer term. So jumping back over to the S&P 500, this is a very average drawdown from all of the other backtested previous bear markets. So there's really no reason to sound the panic alarms and to start panicking, but there is definitely reasons to be risk off while we're below this critical risk level. So keep in mind that backtest does imply the bottom is likely in, but that doesn't mean it's not still going to be a very volatile market. So you will want to still assess your risk and your trades each and every day, and only use the backtest as a very long-term bigger picture, especially if you're an investor. Also remember, in the Stocks Channel Discord, we trade by following price action each day, and I give you all of my intraday updates and analysis. So if you're looking for more help being a price action trader or managing risk, come join us in the Stocks Channel Trading Discord community, which you can find out how to join by clicking on the link below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking for more information about Bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.